More interesting stock picks for you this time around. Brian Boland's going to kick things off here in the auto parts group.
Yeah, Methode Electronics. They make the center console dash piece. You know, if you haven't been shopping for a car recently, there's been a lot of adjustments here. You know, the touch screens are out there. You know, obviously the Tesla touch screen is kind of the big one that everyone's looking at, 17-incher. But there's other smaller touch screens. Ford is a big user of those. So
that's the part they make?
Yes, that's the part that Methode makes, and it's a high margin type product here. So it's not your average, just your dash and your dial buttons. It's going to have access to your iPod. It's going to have navigation controls. It's going to control obviously the radio and things like that. But it's obviously a little bit more than what you're used to. They've reported 2 great quarters going forward. Look for more of the same. We've seen great auto sales numbers. The more we see of that, the more likelihood it is that they're putting more of those good, nice new dashes inside of those new cars.
All right. No, I have not shopped for a car lately, but I don't wear cashmere sport coats either. So it's just out of my league. What
Can't help you there, Terry.
Right. Nina, you've got an ETF pick for us.
Yeah, it's Cambria Shareholder Yield ETF. The ticker is SYLD. And it is based on research that free cash flow is a very good indicator of the inherent strength of a company. And 3 key indicators of free cash flow are dividends, share repurchases, and debt reduction. Now, all investors like dividends. They focus on dividends all the time when considering a stock. But by focusing on dividends alone, they miss the larger picture, because more companies have been spending more on buybacks than on dividends in the past few years. And that's why the buyback ETF has been doing very well this year. And they totally miss the debt reduction part. So this ETF takes all the 3 factors into account that together comprise the shareholder yield. And shareholder yield ultimately results in shareholder value enhancement. Okay. It has about 100 stocks, mostly large caps, from financials, consumer discretionary, and technology space. It charges an expense ratio of 59 basis points, which is pretty reasonable for an actively managed fund. And it was launched in May this year, and it has been outperforming the broader market since its launch.
Okay, Eric, you've got a stock this time around.
That's right. Looking in the oil space, specifically Sandridge. This company's small cap, about $2.3 billion in market cap, and it's a Zacks #2 stock. The earnings estimates have actually been soaring over the past month, actually doubled for the current year in the past 30 days. So some pretty strong estimate activity over the last month. And the reason to look at this company is because they focus on the Mississippi lime play in the shale space. So they're not up in North Dakota or over in Marcellus. They're looking at a space that's often overlooked by many of the larger companies. And they can make this profitable because they're a much lower cost company, so they can drill more effectively than some of the other larger names in the space. And they saw a pretty solid earnings report lately. The stock's been beaten down a little bit, and it's going to be a little bit high risk. But thanks to the solid industry rank and the great earnings estimate revisions we've seen over the past month, this could be a very great time to get in on this name.
All right, thank you all for that. More stock picks and stock picking strategies on our website, Zacks.com. Get on over and check them out if you haven't already. And with everyone here, I'm Terry Ruffalo.